Hey everyone, welcome back to the channel. Now before we get into what you should be doing in this type of market environment, I just want to quickly look at where we're at in the market right now. Now since the last video, we've been going through some incredibly volatile times. This is a picture of the top 3 largest percentage changes in the NASDAQ index. And as you can see, on April 9th, we had the second biggest day ever. As I can imagine you guys all witnessed, we went up 12%, which is just crazy. Now, as you can imagine, the VIX also went completely vertical. It went up all the way to almost 60, falling back down now to 40 after the big rise. But these are volatility levels we haven't seen since the pandemic, really. So very, very volatile times. Interestingly and alarmingly, the 10-year Treasury yield is now back over 4% after dropping under that momentarily. Now, this is bad, particularly bad because the US has huge amounts of debt needing to be refinanced this year in 2025, and they want to be able to do that at the lowest rate possible. So I think if rates stay in this range, Jerome Powell is going to face huge pressure from the White House to start cutting rates again as early as May. So now the question is, in these super volatile times, what should I be doing? Well, under my last video, I got a comment from Gabriel who said, I wanted to buy these stocks 2 days ago, but waited one more day. And now they're all up 15 to 25%. So I just missed the biggest opportunity. But I guess it will keep on rising. And here's what I responded. I told him, you might get another opportunity in the next few months, but in the meantime, you could start dollar cost averaging. Now, I'm sure you've heard about dollar cost averaging 1,000 times. Everyone talks about it. But here's a graph to make you understand why it's so effective. So like Gabriel, you could decide to wait for those prices to finally drop again to the prices we had seen a few days ago when everything dropped huge amounts, or you could start buying now. And the reason I think it's a good idea to start buying now is represented in this graph perfectly. So this is a graph of when the S&P 500 closes at a 200-day low, and the following day, 97% of stocks in the index go up. So as you can see, the first 6 months, well, let's say the first 2 months actually, are pretty volatile. There's certain times where the markets were red, certain times when the markets were green. But as you move along further, you can see that after 9 months, every single time, the markets were up. And they were up pretty substantially, on average 25%. And a whole year later, on average, the S&P 500 was up 30% after an event like this one. Now let's take Google's chart as an example. So we all know it hit all-time highs in the beginning of February, dropping all the way down recently to $142.66. Trading back up after that huge day, we're now around $155. So if you were to buy today, obviously, you wouldn't be getting the so-called bottom, although we don't even know that it truly will be the bottom at 142. But let's just say you bought today. If you're pretty confident that Google is going to make new all-time highs, which is extremely likely, you would still be making 35% roughly. Now this would be compared to if you had bought the bottom at 142, 45%. Now, this may seem like a substantial difference, but between a 35 and 45% gain, that is an excellent gain. And if you look further long-term at $250, which is a long-term price target for Google, you're still going to be making great profit. So here we are on Amazon's chart. I think it's still a great buy at $180 roughly. And I think if you haven't already started, it's time to deploy cash on your highest conviction stocks. Now you want to start small purchases and continue to increase the size gradually as stocks fall further and further. This will create a strong effect on your average price, and you'll be able to bring it down as the stock falls. Also, another tip, I think in these super volatile times, it's good not to check your brokerage account too often, as this can lead to emotional reactions, maybe selling out of a stock when you shouldn't, or making too big of a purchase. So I think it's good to just check it once a day, see how things are going, and then go along with your day. Now, if you don't really know what to buy, you don't have any stocks you've been following for a long time, or you don't have much conviction in stocks you've researched, you can check out my last video where I talked about the 4 stocks that I'm personally buying right now, Amazon being one of them. Now, to end off this video, I want to leave you guys with this small quote from none other than Albert Einstein, who says, "Compound interest is the 8th wonder of the world. He who understands it earns it. He who doesn't pays it." Now, basically what this means is get in stocks and stay in stocks. I think this is a great time to be buying your high conviction stocks and keeping them for the long term. So as Albert Einstein said, compound interest is very, very powerful. So if you can get into good stocks right now, it'll be a great decision for your future. I hope you guys enjoyed my take on what you should be doing in this sort of market. If you could subscribe, that'd be greatly appreciated. I hope you guys enjoyed the video and have a great rest of your day.